Welcome back to Cryptolytics. Give you a fresh take on cryptoanalytics. And this is a TA update where I cover some of the latest price action in the crypto space. So let's jump in. Well, feels like it's been forever since I've done one of these. This one is going to be mainly about the technical breakdown of the current market condition. I'm going to go over a few charts and show what I'm seeing at the moment and just give you my insights on what's happening in the market. So first I'll start here on this chart. This is usually my 1 hour chart. That's basically what I use to look at the stuck at the heat map and the open interest. And one big thing I really want to bring to everyone's attention is just how much open interest there is in the market. So we had this level here tag about 12 billion almost in open interest. And it's very rare that you get these new massive peaks without some sort of rejection. And even see that this candle here, really interesting that you could tell everyone was over leveraging long because there you could see this position with this candle here, a very small candle, not even like about 3%, right? It's not even that much. But look at this massive whipsaw within the open interests. What huge 10% in that entire candle. It basically was shot up and basically all the way back down is probably longs getting wrecked. And we're talking probably very over leveraged longs. So that was our all-time high for open interest on such an unimportant looking candle, right? And then we had our proper all-time high here when Bitcoin hit 124K, which to me looks like the beginnings of an ABC corrective pattern. So we're talking that was the A there, then the B wave, and then the C wave down into what I think will get support. So I think maybe in the short term, you might get a small little bounce in this area here, maybe up to the trend line break, and then down here. You see I've got this trend line here, and really a trend line going back to here at the lows in April at, well, 75K. It's pretty crazy that we're at 75K back in April this year. It's hard to believe, isn't it? Where we basically create this trend line here with a touch here, and you could kind of see a touch here. And then we've got a break here of this trend line, which doesn't look the best, but I think that Bitcoin has kind of overdue for, I guess, some sort of corrective pattern. I still believe we've got our upside targets in play. I think a correction from anywhere between 106 to 112K is on the cards. Just to reset this open interest a bit, already has preset pretty well, though, admittedly. See, we've come down from 12 down to about 9.9, but you could definitely correct a little more. Though I'm seeing some pretty dark blue candles here, and on the 1 hour, I usually use these to buy. Like time we started seeing these dark blue candles, I was putting in buy orders from 113 to 112. In Drift, I had a scale order in to buy anywhere between 113 and 112, and it filled all of those on a couple of my accounts. And here we are again, the exact same place. So I guess I've done the same thing. Essentially, I've put some buy scale orders in from ranging from 106 to 112, and I'm using the ascending mode, which means that when price goes down more, or the buy orders become much larger. So it's like a dynamic DCAs. Some people have coined the term, but the long and short of it is you take a nibble at the start when you're buying, and then as price moves down more, the buying becomes more aggressive. So it brings your average buy price down much further because the orders further down are much larger. So I think it's a really good way to buy. Yeah, if you think we're going to come down to a certain range or to a certain point potentially, it's just my personal favorite way of playing it. And really, when you think of it like that, means that Drift essentially has all these grid bots that people are talking about, which aren't actually bots. All they are is they're a set of limit orders that put however many you set below and above price. And a good thing about that is it helps make the market because the order book requires liquidity or resting limit orders in order to mac the market and match for when someone executes a market order, right? So with the D-log, like Drift, which is a decentralized limit order book, it means that there will be more orders to match buy or sell orders, essentially. So it means that essentially Drift has the GridBot setup, or the GridBot functionality, is that they don't call it that, they just call it scale orders. But you can easily put in 10 or 20 buy orders at price 2 below, so whatever the current mark price is, you could buy all the way down to 106 if you think it might get there. I mean, Drift has this, can do the exact same thing in something like Drift, which is completely decentralized. So let's have a look at another chart. We're going to look at this 3-day chart, which I've just put on. I don't usually use Bollinger Bands, but I thought for all intensive purposes, I would put it on here. Within the next day and 1 day and 16 hours, which you can see right here is I like 3-day candles because they're good for confirmation, but that's how long this candle has left, a timer recording, before it closes. It has to really reclaim this area here. It really does have to come back above hold. This is support. If this is anything to go by, you could see here the support was quite good for it. But you could see over here when we lost that, well, it can just bounce around here as well. That's the other thing while the market waits for decision time. But you can see at least here when the coin below this level, it started bouncing around and then it just lost it and went to, was support, then became resistance, and then came back to the next support here. So I guess that's one thing. Could use this moving average as some tell of how the market's doing. The other thing I look at as well is these candlestick pattern indicator, which is really cool. It's one by Luxelger. It's called Reversal Candlestick Structure. And I think it's pretty solid, to be honest. Nailed the bottom here, and it really nailed this top. If you ask me, that is a top. It did start consolidating, going sideways after that first sort of dark red candle was formed, and here as well. And yes, we did put in another high after this, so it came up and then we came down to test that line, if you will, and then came back up and then failed. And now it looks like we're coming down again, which is a classic Elliott wave B and C corrective pattern. So I don't usually use this, but really like these candlesticks. They just had a heap of flashing signs that maybe we'll do for a correction here. I use these as confluence. These are the pivot surge. Again, it's like Pirate proprietary indicator that I've coded myself. Uses cumulative volume index, which is the CVI. It uses the shift in the delta in order to try and predict potential shifts in momentum. For example, we're down here. We had this buy signal that was pretty solid. Where these sell signals here, which at the times felt pretty silly, but then it ended up going down in the end. These sell signals, probably the best. Use them with confluence. With other things, I like to use them in confluence with the candlesticks. Because you can see here, if you ignored all these ones that didn't have the candlesticks, then long and short, I just think that they're really good. This is good for confluence. You wouldn't particularly trade this, but good for confluence, right? Have a look at another one. We saw the profit pivot surge that is on the weekly, which doesn't give very many signals. That one actually triggered a sell signal. So this is on my weekly cycle chart, and that doesn't happen very often. So we don't get those very often, and we were also getting red candles on here as well. And also on terms of the cut data, so that's the commitment of traders on CMA. We saw that the large traders here, because if we have a look here at the settings, you see green for me is the large commercials, and then red, the two reds is retail and large traders. So large commercial is your miners and your really, I guess what to do, institutional traders, I would say. And yeah, essentially you want to follow the green and you want to go with what they're doing, and then you want to counter trade, you will, the reds. We're talking retail and people with a lot of money could say. Now we're getting a nice reset here on the SI, which is nice, but in terms of this commitment of traders, we did see a crossover. You don't see that very often. Bearish crossover, which you could say occurred over here as well. And then what happened just after that, that was right here. What happened right after that was this. So I'm not saying that's going to happen again. I'm just saying that this is the sort of thing that can happen during a bearish crossover, right? That's worth considering. And I don't think that this is going to happen because of all of the institutional buying of Bitcoin, but I think there's a possibility that we'll get at least a move down to this region here and revisit the 21-week moving average. The other one below, it's the bull market support band. And at most, I would think we would potentially come down to the 50 EMA over the course, and this is not my high probability case. This is my base case is a potential, could play out, but it really would not look good for market structure, because then we could look at starting to create a head and shoulders or something like that. But yeah, could potentially come down to the 50-week EMA between now and October, right? Because seasonality generally states that your September generally pretty bearish. So I would think maybe the lowest we could get to is the 50. You could see the 50 throughout this entire bull market has been a very solid support, even for a few weeks. Back here, we dropped below it for about a month. We dropped below it, and then as soon as we reclaimed it, had to support. We had a support here. The 50's been pretty good. Soon as it crossed above it, that was the start of the bull market, essentially, and it just held the support. And this bull drop below here was a bit of a fake out, I would say, deviation, or a stop loss hunt, whatever you want to call it. Just something to confuse traders, I suppose, or confuse people, or make them think like it's all over. It's time to sell. So it out pretty well here as well, and I think if it came back down here, I could hold again, but 94, not my base case. I think that most likely the higher probability at the moment is between 1.6 and 112K. My support at the moment, again, 2 pivot surge signals, one here and one here, and then another there, which is, this one is a bit more sensitive. These ones I take way more seriously. So you can see here, we got 2 buy signals down the bottom there, and that was amazing. We got 46% roughly, or more, Bitcoin after that. And again, we had a sell signal here, with another one before it, with all the red candlesticks there. You can quite clearly see the red candlesticks. Same indicator I mentioned before. And then we had the pivot surge, and then we went down to the 50, right? So are we getting the same sort of thing now? Maybe. So again, we had the pivot surges and the red candlesticks, and then we potentially coming down to here. I think that there's probably enough buying pressure in order to help Bitcoin not drop below the 21-week moving average. So I'm not thinking it's going to drop much below that. Again, that would still be a high, a low to here. Structurally, that will keep things intact for, again, basically, even if we just mess around here for a little bit and then start to make our way up to the final target for the year, which is between, I think, about 130 to 145. So yeah, 130 to 145 is sort of my base case target, with a correction again at the start of the year, and then at some stage towards the end of the year, I would say we'd probably start to make our way up to, I think, about 160, anyway, between 150, 160, and some potential upper targets to 180 or so. If we look at the iCycle top moving average, currently sitting at 186, and that's done really well at predicting tops in the past. So that's currently sitting at around 186. So there you go. That's we could definitely put that on as a target there. If we start to roll over this, and then this other moving average for this comes up to meet it and triggers that signal, then yeah, something a lot of people are watching. That'll trigger the sell event for the Python top. Obviously, I'm watching altcoins as well, and if you follow me on X, you will see that I have got an ETH long in on Drift. And again, that's the scale order I was talking about. Really cool. Really like this feature. Really good for taking profit, and really good for getting back in, scaling back into positions. I have a rather sizable position open on Drift for ETH. It's already taken some profit off the table, which I need to do, because what I was doing with this is I was recently traveling, and I was using this as my piggy bank. So I was claiming the profit from this, because you don't have to necessarily close the position. You can just settle your stablecoin profits into USDC, and then I was loading those up on a Sol card, and then using that to pay for stuff like hotels and meals out. And they just basically anything, Apple Pay. So yeah, I mean, that's a cool stuff that you can do with Drift and Sol card. Really, really, really was happy with being able to do that. And it was really cool because basically when I was traveling, the market was going up, and this ETH position was just printing me free cash, what it felt like anyway. And I've closed some of the position so that my liquidation price would stay, because obviously if I'm taking money out of the trade, then I'm reducing my margin, which means that the liquidation price obviously creeps up closer and closer to the current price. So I fixed that up by taking profit. It was all planned profit taking. I didn't have to close out the position in order to claim that profit, right? I could just settle anytime. So that was when I was talking about this. Cool. And yeah, as I said in this post as well, you can get 12% APY in your stable coins as well. So if you have taken any profit, I think Drift is a pretty good place to park your capital, because 11%, if you've got a decent amount of stable coins or you get paid in Web3 in stable coins, that's pretty incredible, as I say here. So if you're in Web3 and you're being paid in stable coins, there are some amazing yield opportunities out there for park stables. Mine currently is in Drift. May as well turn a park capital into a side hustle. So that's what I mean by that. You've got a decent amount of stable coins. It's just sitting there inflating away, right? 10% is well and truly enough to counteract that inflation. And then obviously, if you do believe that the market's going to keep going up, then hey, maybe turn some of those stable coins into Injasol or whatever you bullish on ETH or whatever. So yeah, I saw this wormhole now has a bridge swap feature akin to Deep Bridge. Did see 1inch recently added a feature akin to it as well, but I likes a lot of native adapts, admittedly, protocols, because our stuff is a bit slow to adopt, whereas the stuff from in the Solana ecosystem just seems a lot faster in terms of or feature innovation. So yeah, I think that this is the true power of DeFi and Web3. And honestly, this actually beats the nominal S&P 500 return, right? And you stay liquid. You can then buy other assets and stuff with it, because you can literally put in buy orders in Drift if you want in spot positions. You don't have to use perps. This is what I was talking about here with this ABC corrective pattern. It's looking like an ABC corrective move may be underway for Bitcoin. My targets, as I mentioned already. So seasonality, September's generally pretty bearish. CVI divs, so that I mentioned before what the pivot surge. It may mean reversion play, and that would be the back to at least the 21 weekly moving average. We did also get a TDSS 9 sell signal on the daily. I don't know how kind of value you give the TDSS 9, but if you give it any, then yeah, had two. We had one here, and then one here, and again, potentially a move down. We'll get to our the 51-day smooth moving average as well. But that sign there of exhaustion from the TDSS 9 was pretty strong, and then obviously a bearish divergence, which is not great, to be honest, but yeah, it is something that we got. And in ETH as well, which again, as I said, I'm in an ETH long down here. We're getting those red candles right here as well, so just thought I would mention that. I think that ACE can get past its all-time highs this cycle. I really don't think that it's going to have any trouble with super bullish news constantly posted all over mainstream media with Tom Lee and his treasury companies, but I think potentially really here at the old all-time high all the way back to here, I guess seems like kind of warranted. I just can't believe it took ETH this time. How many years is that? 4 years get poised to a total-time high again, but things happen. But it did break out here, so even if he comes back down here to Y like 100, it's just retesting the breakout zone. But what we had right here, that was a breakout zone retest. This move back down is a breakout zone retest, and then up. So, I mean, we already had that, admittedly, but yeah, it may happen again. The only I mention here is 106K is the edge of the liquidity zone or the liquidation zone, be the maxed pain area. This it did get a pretty decent reset in the fear and greed index. On Bitcoin, yeah, so the max pain on Bitcoin is actually 111,000, 112,000 roughly, is the max pain for Bitcoin for the last month. So that's not too far from price, to be honest. If we have a look at the liquidation heat map, we'll go Model 3, I would say the liquidity zone here, but there is a big pocket liquidity right there. You can see the chart there, right at 1, that's max pain, right? As I mentioned before, if we have a look at the Fear and Greed Index, you can see that it's come back a little bit, but yeah, it did reset to 45, which is pretty low. Not as low as it was back in June. That got there after a prolonged period of time, so if we do just keep ranging here, or if we do make another leg, then we might come down to match this sort of Fear and Greed Index reading of 37, and that'd be a nice reset in the market, I would say. But in terms of the dip, I mean, this dip could just be done. This potential move lower, it may not even happen. So I think the main thing is we need to really reclaim, I would say, probably the 118. If we can get back above 118, then I would say that this dip, if you will, just done. I would say if we can hold above this, and then we just ignore September, potentially. It doesn't really happen. Usually seasonality is pretty solid, so yeah, it could happen anyway, right? So yeah, we'll just have to see. That's it for the video. Like the video if you liked it, drop a comment below, subscribe to the channel if you liked this, although I don't really release a lot of content anymore, but if you liked it anyway, then yep, feel free to give me a subscribe, and do another video at some stage in the future, I'm sure. Keep safe out there. This is Cryptolytics signing out. Have a good one.